Fed very likely to raise interest rates next month, given last Friday's tremendous jobs report. You might want to start circling the wagons around some high-quality secular growth stories that can trump even a series of rate hikes. Which brings me to Cyberark, CYBR, the once red-hot Israeli cybersecurity company stock. The company's still hot. That's now down 41% from its June highs. After getting slammed by the sell-off in all the high-flying growth stocks over the summer, Cyberark started getting bashed again last week when FireEye, another company, let's say in the same cohort, talked about how the overall level of hacking and thus cybersecurity spending is now leveling off. Hence why Cyberark got hit again for $2.45 today. But here's the thing. We know that Cyberark, which has built a juicy niche for itself by helping companies protect what are known as privileged accounts or administrator accounts, which have become juicy targets for hackers because these accounts control the proverbial keys to the information technology kingdom. It's actually doing incredibly well. That's because the company shot the lights out when it reported last Thursday after FireEye's disappointing quarter. Cyberark delivered a huge bottom line beat, solid top line beat, plus management also raised its guidance for the next quarter as well as full year. By the way, it's a profitable company. It was a classic beat and raise quarter, and yet the stock is now down nearly $5 since then. Why? I think Cyberark's being dragged down because it's a member of Hack. That's that cybersecurity ETF, and this particular ETF really has the ability to crush the entire sector, regardless of how well some of the companies in it are doing. So is Cyberark a bargain at these levels? Let's check in with Udi Mokady. He's the founder and CEO of Cyberark Software. Hear more about the quarter and where the company's headed. Mr. Mokady, welcome back to Mad Money.
Great to be back.
Good to see you, sir.
Good to see you.
Well, first, I was on your call, and unlike the FireEye call, it was always congratulations on your great efforts. You got a 43% increase in revenue. You have tremendous new customers. A huge number of the Fortune 500 use you. Where are you in terms of seeing the spend on cybersecurity versus, say, FireEye?
It was a record quarter for us. We did not see any change in the spend because Cyberark is all about proactive security. You don't have to be breached to come to Cyberark. We're proactive. You put it ahead of time.
And in that's important because FireEye did say that, look, the high-profile hacks weren't in the paper, so we didn't get the call. But there is this systemic spend in information technology, cyber warfare, and you are getting a fair share of that.
The information security market is thriving, especially those that secure the inside. We stand out because there's a move from securing the perimeter to securing the inside of the organization, and Cyberark is poised to get benefit from that.
And one of the things I saw is you've entered the federal market. I kept waiting for someone to be good enough to be there. How's that going?
That's great. We've been investing in that for a while. We had common criteria certification to be able to sell to the federal, and it was a record quarter for us in federal sales with 10 new customers across legislative and executive branches, really great names, and it's a beginning for us. It's going to be a long-term market for Cyberark.
Okay, I need you to talk about what exactly, it's kind of difficult for some of our viewers to really understand. Like, for instance, like steel. Some of the companies that you got in that don't sound like companies that we should worry about.
I think that's the beauty of the sector. It used to be that only financial services equated
that's all
security with information security
yes.
and protecting digital assets. Now it's cross-vertical. We doubled in healthcare. We doubled in manufacturing.
Okay, but what is manufacturing worried about?
They're worried about their intellectual property. They're worried about being in the news as being hacked, and they're worried about any personal identifiable information that they have, their employees, their suppliers, their customers.
Now, David DeWalt, is an honest guy, came on and he said he felt that the security deal that we reached with China has cut the number of hacks. It doesn't sound like, if you're worried about intellectual property, that the Chinese have gone away.
The hacking has not gone away. There are many actors that are happy to do that. There are also for-profit hackers, as we discussed in the past. So that is not declining. In our sales model, we're not dependent on hacking happen. It's a proactive measure that you put ahead of time.
But again, I don't want to focus too much on FireEye, but they were here with us. You do have a partnership with Mandiant, so it's not like you guys aren't working together.
We have a great field partnership with Mandiant, and we love it when we meet in the field and secure customers together.
Now, you're getting a very high win rate. Are you winning against other niche companies? Or are you winning against the giant soup to nuts? And the reason I say this is because I follow IBM closely, and IBM, which hit a 52-week low today, is saying, listen, we are really making inroads in cybersecurity. Do you see an IBM?
We do not see an IBM.
You do not see IBM?
We do not see an IBM.
Oh, now, wait a second. You do not see IBM in this space?
In our space, no. Of course, they have...
But that's where they should be.
Well, they have elbows in some pieces of the security sector, but in our space, you have to be really an expert. It's a layer that has to be talking to mission-critical systems on the inside, and we have a leadership role here.
Okay, that's important.
Worked hard to get there.
That's important. even though you're making money, you talk about that you need to invest to drive growth. That's going to continue, right?
Yes, we see it as a greenfield opportunity. The example
Right.
of the steel companies is just to show that almost every company in the world needs this. So we
And
have
yet
an
there's so
opportunity
many
to go after
companies. You
this.
talk about how few companies are actually still spending.
Yes. It's greenfield. We have 2,000 customers. We're happy about that, but for us, it's just the beginning. We have to get into the 10,000 customers.
And once you're in with one product, you have a huge percent that then take 3 or more in a very short period.
Yes, we have a very strong land and expand model. We showed this quarter that more than 25% of our new customers bought 3 or more products. And so that's the tip of the iceberg. Those 2,000 customers that we have, or any new customer, we land and then we expand across the solution base.
Well, I mean, right now, obviously, the high growth stocks are in a bit of a bear market, and people are taking their cue from the worst, not the best. But I think, look, when smoke clears, you guys are clearly the profitable winner. Although Palo Alto does a good job, too, but I love your stuff. That's Udi Mokady. He's the president and CEO of Cyberark Software. Guys, it was a beautiful quarter. It is being brought down by an ETF and by a feeling that there haven't been enough hacks in the paper lately. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.